Blockchain is the tech. Bitcoin is merely the first mainstream manifestation of its potential. Mark Koenigsberg. Ethereum was founded in 2013 by Vitalik Buterin, a Russian-Canadian programmer, and a group of other crypto entrepreneurs. Many of the people behind Ethereum had previously worked in the Bitcoin community. Bitcoin's functionality was too small for Buterin. In a Business Insider interview, he likened it to a pocket calculator that does one thing well, while Ethereum is more like a smartphone with many applications. That's the main premise of Ethereum. Welcome to CryptoCryptid. Today we're going to be looking at Ethereum Cryptocurrency. And if you want to know more about the cryptocurrency, make sure you follow our channel. Let's get into the video. Ethereum is a fork of Bitcoin, with a few main variations. Both allow you to use digital money without the need of a payment provider or a bank. However, since Ethereum is programmable, you can use it to create a variety of digital assets, including Bitcoin. Ethereum is a blockchain with a built-in programming language, according to Buterin, and the most reasonable way to potentially construct a network that can be used for many more kinds of applications. It allows smart contracts and decentralized applications to be designed and run without the need for any downtime, abuse, power, or third-party intervention. The network runs upon the Ethash algorithm. Ethereum network has a wide range of possible uses, all of which are fueled by its native cryptographic token, Ether. Ethereum held a pre-sale for Ether in 2014, which was met with a huge response. Ether is used by developers to create and operate applications on the Ethereum blockchain, similar to how gasoline is used to run commands on a car. Smart contracts are sets of code that carry out a series of instructions and run on the blockchain. These are hosted on the Ethereum network. Product of these smart contracts, decentralized applications or dApps, are similar to mobile apps that run on Google's Android or Apple's iOS operating systems, but they aren't controlled by a single company or authority. In these smart contracts, two parties agree to provide goods or services in the future, just like they would in any other deal. Unlike traditional contracts, however, lawyers are not needed. The parties code the contract on the Ethereum blockchain, and it self-executes and delivers Ether to the appropriate party once the contract's conditions are met. The Ethereum concept is to give users more power by removing intermediaries and replacing them with smart contracts that automatically execute rules. Ether is used for various purposes. It is circulated as a digital currency on exchanges in the same way that other cryptocurrencies are, and it is used to operate applications on the Ethereum network. People all over the world use Ether to make purchases as a store of cash or as collateral, according to Ethereum. An Ether transaction is generally settled in seconds, and transactions contain executable code, unlike Bitcoin. Ethereum's developers intend to replace internet third parties, like those who store data, move mortgages, and keep track of complex financial instruments, with the same technology as Bitcoin. These apps help users in a variety of ways, such as making it easier to share vacation images on social media with friends. However, they've been accused of exploiting this power by censoring data or, in the case of hacks, unintentionally spilling confidential user data. NFTs. The rise of non-fungible tokens, or NFTs, has recently boosted activity on the Ether network. Since these tokens are one of a kind, they've been used to display digital art, sports memorabilia, virtual real estate, and game pieces. The NFTs are usually sold via various digital auction platforms on the Ethereum blockchain. Ethereum, the world computer. Many supporters consider Ethereum as a world computer that has the potential to decentralize the internet. Traditional financial instruments such as the money market funds that enable users to earn interest are offered in decentralized architecture outside of the control of corporations and governments through decentralized finance. Web3-enabled browser extensions or applications such as MetaMask allow users to communicate directly with Ethereum blockchain through a website. Many of these dApps can be linked and combined to construct more complex financial services. MakerDAO and Compound are two examples of DeFi platforms. Uniswap, a decentralized Ethereum token exchange, increased its liquidity from $20 million to $2.9 billion by 2020. Over $11 billion had just been invested in various DeFi protocols as of October 2020. Besides that, certain DeFi protocols enable synthetic forms of various assets, such as Bitcoin, gold, and oil, to become accessible and tradable on the Ethereum network, as well as compatible with all of Ethereum's major wallets and applications through a process known as wrapping. Permissioned ledger models based on Ethereum are being used and researched for a variety of projects. JPMorgan Chase suggested building JPM Coin on the quorum permission variant of the Ethereum blockchain in 2017. It is built to walk the line between private and public in the world of derivatives and payments. The aim is to please regulators who need seamless access to financial transactions, while also maintaining the privacy of parties who do not want their identities or transaction information revealed to the general public. The Royal Bank of Scotland has approved the introduction of clearing and settlement mechanism based on Ethereum's distributed ledger and smart contract platform. Before you get some Ether, you'll need somewhere to store it. This leads to the concept of an Ethereum wallet. An Ethereum wallet, like its physical equivalent, is designed to store value. The majority of wallets are digital applications that can be used on a smartphone or a laptop. These digital wallets often store digital money in the form of cryptocurrencies such as Bitcoin and Ether. Private keys, which are hidden keys that can be used to access Ether, are stored in Ethereum wallets. Each key is a long, jumbled string of letters and numbers that looks something like this. The money associated with the private keys can only be spent by the owners of the keys. There are many different types of Ethereum wallets made specifically for storing these private keys. For example, mobile wallets, desktop wallets, paper wallets, and hardware wallets. It is up to you to decide which one is best for you in terms of convenience and safety. Generally, these two ideas are completely contradictory. The more convenient, the less safe, and vice versa. When it comes to cryptocurrency wallets, there's one important thing to remember. Losing your private key means permanently sacrificing your Ether. It's a far bigger deal than forgetting an online service password. The lack of trusted third parties becomes a double-edged sword at this stage. Although intermediaries are no longer needed to validate transactions, there's no assistance counter to contact if anyone loses their secret key. Ethereum weaknesses. The cost of transactions are increasing. The growing trend of Ethereum has resulted in higher operational costs. In February 2021, Ethereum management fees, also known as gas, reached a new high of $23 per transaction, which is awesome if you're looking to make money as a miner, but less if you're intending to utilize the network. That's because unlike Bitcoin, which transaction verifiers are rewarded by the network, Ethereum allows those involved in the transaction to pay the charge. Higher inflation potential for cryptocurrency. Although Ethereum has an annual cap of 18 million Ether, there is no lifetime limitation on the amount of coins that can be created. As a result, Ethereum may behave more like dollars as an asset and may not appreciate as much as Bitcoin, which has a strict lifetime cap on the number of coins. Developers encounter steep hill to climb. As developers move away from centralized processing and towards decentralized networks, Ethereum can be challenging to grasp. After all, Ethereum is far from ideal. The success of the game CryptoKitties caused the Ether network to become extremely crowded in 2017, drastically slowing down transactions and forcing the game's developers to increase their fees. Scalability is one of the most difficult issues for cryptocurrencies, including Ethereum. In short, crypto developers and enthusiasts want the blockchain to have as many users as possible. Right now, it can only handle a few transactions per second, which isn't much as compared to Visa, Facebook, and other apps to which Ethereum's developers aim to compete with in the future. It actually uses a proof-of-work protocol which is similar to Bitcoin's. This implies that crypto miners must compete to solve complicated mathematical puzzles in order to verify transactions using purpose-built computers. Ethereum is currently undergoing a major update known as Ethereum 2.0. It will then move to a proof-of-stake model in which new transactions are verified by stakers who already own some Ether. The upgrade, according to crypto investors, would allow Ethereum network to scale, performing several more transactions at a faster rate and hosting apps with users around the globe. It could also lead to a price increase in the short term. Token holders who want to become stakers and verify transactions on the new network are holding an immense share of Ether for a lockup period. This could theoretically restrict the amount of Ether available. For a variety of reasons, you may want to consider investing in the Ethereum network. First, it has worth and use as a virtual currency. Second, the Ethereum blockchain will become more appealing when it migrates to the new protocol. And third, demand for Ethereum will escalate as more users use Ethereum distributed apps. Apart from purchasing Ether directly, one can try investing in companies that are developing Ethereum-based applications. Users might even invest in a professional investment fund, such as the Bitwise Ethereum Fund or GRAYSCALE Ethereum Trust if they desire managing their money. However, these are available exclusively to approved investors. But, even if you believe in Ethereum's potential, remember the high risk and uncertainty in this market before making any major investment in Ether or other cryptocurrencies. Make sure it's money you can afford to lose. Many people, including the internet's pioneers, assume the internet was designed to be decentralized from the start, and a splintered revolution has sprung up on using modern technologies to help achieve this aim. One of the innovations that has supported this movement is Ethereum. Ethereum is a platform for digital currency, international payments, and applications. The community has created a thriving digital economy as well as in innovative new ways for creators to make money online. It's open to everyone, anywhere in the world. All you really need is internet access. If you find this video helpful, please like, comment, and subscribe to our YouTube channel. Stay tuned for more cryptocurrency related news, and I'll see you in the next video.